myself, Dave Pearchin, and my main man, RJ Pepino. We are doing an impromptu live today because there's a ton of economic data coming out, a lot of big stuff going. Things are moving and shaking in the markets. Really started yesterday when the Fed met. We're going to be talking about the latest Federal Reserve meeting, kind of what they implied. And I mean, the markets today, there was more economic data that came out today, which is definitely going to affect what goes on and affect real estate. So first and foremost, welcome, RJ.
Happy to be here. Happy to be here. Guys, if you haven't checked out our YouTube channel, head over there. The Cream Real Estate Investors, right? And then we have a new podcast called Cash Flow Real Estate and Money. And head on over there into, I think it's going to be on, Spotify and Apple and all the things. So we're happy to get this launched as well. Interesting things happening in the economy and with companies. I just read something today recently about one of the big employers, one of the big companies that set up shop east of Columbus was really kind of a big deal in the last couple of years. So it's interesting. We'll talk about it here in the show, but it's interesting to see what's going on.
Yeah, and the first thing I saw when I first saw RJ in the office this morning, first thing I did was pull up the stock market. I do like to follow the stock market. It's good, especially if you're out there raising money for your real estate deals. You should know what's happening in the economy. Numerous times, our private lenders, they want to pick our brain. They want to ask, what do you think about this and that? So you want to be informed, right? Especially because you're basically competing with other financial instruments out there. You're competing as a real estate investor when you're raising private money, and you need to kind of have a thesis. You need to kind of have an explanation on why a private lender would invest their hard-earned money with you and maybe not another vehicle like a stock or a bond or a treasury bill or something like that. So first thing I talked about with RJ this morning is I showed him the stock market. Stock market's in a free fall right now. I mean, it's pretty bloody out there today. The NASDAQ, as we talk, is down 2.63%. S&P 500 is down over 2% as well. And that's because jobs data came out this morning. And the jobs data, it was expected to be, I believe, 174,000 new jobs created, but it was like way off and it came in way lower. I believe it came in at like 114,000 new jobs. So the market's expecting 117,000 or 174,000, but the reality was way lower. And that means unemployment numbers are spiking. So they were expecting unemployment to, I think, be like 4.1, but it came in at like 4.3. It just, everything looked really ugly today. And this comes right after a Fed meeting yesterday where the Fed was saying like, hey, we think we're going to cut interest rates in September because they've been tracking the inflation data in the last several months. The inflation data, it's the CPI. I call it the CP lie because it's definitely not accurate. It's the government's gauge of tracking inflation. Inflation's way worse than they make it out to be, but that's kind of how they make decisions based off that CPI. And the CPI has been ticking down. So since inflation's been going down, now Jerome Powell, the chairman of the Federal Reserve, came out and said, well, since we've gotten good data, inflation seems to be cooling. We are looking to cut interest rates in September. So that basically is a good thing for us as real estate investors. But, we're going to talk about this in just a second. He talked about, we're going to tick down the interest rate. We're thinking about, they always use, general terminology, data dependent. We're going to see how things look. A lot's going to happen between now and September, but we're looking to cut rates in September. And then today, the jobs data hit. And since the job market is looking so ugly, now they're like definitely going to cut rates because they want businesses to have access to money so they could keep employment up. Unfortunately, we're a whole economy and a whole country just fueled off debt. interest rates control everything, right? So when rates come down, that means but businesses can borrow more money and essentially hire more people. It helps the job market when rates come down. So that's a mouthful. RJ, what questions do you have of what I just threw up onto our audience here today?
So I'm gonna play some I guess not devil's advocate, but it's someone who's not informed, and I got some questions. Jobs reports come out what every month, right?
Mm-hmm.
And it's important to look at that, especially if you're an investor, because it shows you data on how many jobs are available out there, right?
Correct.
So who reports to the jobs report? Like, how do they get that data?
There's
And
yeah, there's
is it
there's like numerous job
Fortune 500
reports.
companies? Is it smaller companies? Is it as a whole, as a nation? The US reports it, and how did they get that data?
Well, there's like an ADP reports, which
Okay.
is like they do payroll.
Yep.
Um, and I don't know specific, there's numerous ways, but one of the ways is like an ADP report.
Gotcha.
So they're tracking the jobs through those type of systems, right? And I guarantee their data is like not accurate, right? It
Right.
never is. We're talking about a big government thing, but just like the CPI, they say like prices are only up what? Like they say like 3% Yeah, right. Things are up way more than that. But their gauge of jobs comes from places like ADP and their own methods of kind of gathering that data.
So I know we're going to get into it, but as a real estate investor, knowing these sources, jobs data report comes out monthly, and then CPI, that's a monthly report as well, right?
Yes.
So with those two things in mind, as a real estate investor, how do you take that data and then go and or not go and buy more houses, or you know maybe you should be waiting to buy, which is something that we don't talk about. We like to still buy, and it's just a numbers game, and you just got to adjust your numbers. But as a real estate investor, why is that relevant to us?
So this is the thing. So they've been tracking the inflation data, and prices have ticked down, and little things, oil and things like that. But home prices have not ticked down. And
Mhm.
we've been covering this at nauseum. The reason the real estate market has stayed up and prices have remained high. In fact, the new median US home price is at an all-time high. So home prices have never come down. So
Mhm.
they've been raising rates for the last several years to control the inflation, to help the inflation come tick down. But guess what hasn't been coming down? Home
It's,
prices.
it's
They haven't been.
they
We're at
haven't.
all-time highs. So what this means is basically and let's talk about the reason home prices are not coming down is because there's no inventory. Why is there no inventory? Why are people not selling their property even though their home value is at an all-time high? Why isn't everybody not putting a sign in the yard to harvest that equity and cash in on all this equity on their house? Why are they not doing that? Because they have a locked in
Locked
3%
in.
mortgage.
Yep.
Why would they do that? It's not worth it for them to put a sign in the yard, even if they're going to make a couple 100,000 in all this equity they have in their house. I'm not trading my 3% mortgage for a 6.5, 7% mortgage. I'm not going to do it. Right. So therefore, since so few people are selling their home, prices have remained high and
Yeah.
demand is still outweighing the supply. There's very little supply out there because no one wants to sell, but demand is still high. Lots of people still want to buy houses, and lots of people are still willing to pay 6%, 7% for a mortgage. There's just no inventory out there. So home prices have stayed high. Now the Fed comes out, and now the Fed is backed up into a corner. They have to lower rates at this point because the job market's getting so ugly out there. We're headed into a recession. Now they have to lower rates. What do you think that's going to do to home prices?
It's gonna
Do,
go more.
do
It's
you
gonna
think
get
this
higher.
will,
It's gonna
yeah, them
rise.
lowering interest
So
rates, because they're only going to lower rates by a little bit, RJ. Do you think that's going to entice a whole bunch of sellers to now want to sell their house?
yeah, I
No.
think so. I
Why would they? Why, like, so if no one's selling their house now, why would them lowering interest rates just encourage all these people to sell their house?
well, if they so if it lowers substantially, it's not going from like where it is now, like 7 point something, 8 or whatever it is, 7.5 or 6.5. It's not going back down to where we saw it in 2020 and 2019.
If people
If
are
it
now,
did, maybe, but again,
if
it's
it
not.
did, think what that would do to the home prices. Because as rates come down, home prices go up. That's how this works. But rates went up, but home prices never came down. It's crazy. So we're dealing with a situation where they raised the interest rates, but home prices never came down. Now they're talking about lower interest rates, and it's just going to make affordability, it's just going to bring more demand, bring more buyers to the market, but it's not going to bring more sellers to the market. It's
Mm.
not. So let's say they lower rates to 5%. If somebody's not willing to cash in and pay off their 3% mortgage for a 6%, they're not going to do it for a 5%. It's crazy.
Yeah.
I mean, even if they lowered it all the way back down, which they won't, to where it was 3%, home prices would be so high at that point. There would be so much demand because now everybody's jumping back into housing that everybody wants to buy. So basically, where we stand is they raised interest rates and it did bring prices down on a lot of things, but not on housing. And now they're about to lower interest rates, but it's not going to bring more supply to the market. It's only going to bring more demand. Home prices are going up. We are in the best business, especially in the affordable housing range. I'm talking about homes valued between 150 and 300 is freaking hotcakes right now. That is what everybody wants. It is an endangered species. It is our job as real estate investors. Every single one of us should be setting up our off-market marketing campaigns, getting as much affordable housing as we possibly can in contract for great prices, raising private money, buying up all this stuff. Buy up as much as you can. It is the best thing to do with your time right now financially if you're in business, right?
Mm.
Better than anything else. Hold on to as much affordable housing as you possibly can because that is what is in the highest demand. We are going to see continue to increase, right? And that is what we are doing here in our business, aren't we, RJ?
Yeah, I mean, we're even throwing we're looking into potentially creating some of this inventory too, because
Correct.
there's not enough in. I mean, if you look at what's going on, we're on somebody's Zoom, but someone was talking about how builders like D.R. Horton are now creating these. They almost look like homes back in, post World War II. They were creating these homes for all of the boom. People needed homes back then, and affordable homes. So you see a lot of 3.2s and 2.2s being created at that price point. So I think there's opportunity there as well, especially now where it's getting a little tight in some of these other little markets that we've been in, these little tertiary markets. Some of the investors that we see are going into those markets now, and they're kind of they're getting all the inventory there. So it's already starting to really compress here in Columbus that I see. It's like harder to get these deals, which we kind of, we're on this path of trying to buy at least 10 rentals in 90 days. But we're not going to just buy it to be cool. We got to stick to our numbers. So, it's, I think there's a lot of opportunity, in my opinion, to create this inventory, and it's a viable play right now.
It is. And you know what it is, though? So a lot of home builders are getting backed up on inventory, but because they're building the $400,000 and $500,000 stuff, because that's what it costs to build a home. I mean, it's tough,
Yeah.
But no, the play is to build the stuff valued around 200 and less. If you can pull that off in the form of building modular homes, building smaller affordable housing, that is the thing because people need to afford it, right?
Mhm.
Not everybody can afford the $500,000 and $600,000 stuff, especially with rates hanging out in the sixes. So even if they drop it in the fives, I just think
Yeah.
the prices are just going to go up. The thing, this affordable housing that we love, RJ, this stuff valued between 150 and 300, it's tough for builders to even build it and make a profit. So we got to go after existing inventory in these price ranges. It is the hottest commodity right now.
Yeah, I agree.
And it's
It
only going
was
to get hotter. It's only getting hotter. So we need to be hustling everybody every single day. No nonsense. Get after it. Know what we're telling you what to go after. It is the hottest commodity. This is what we teach people to do, right? Go after. We're super bullish on the affordable housing market. We find these deals, really good deals that are off market, and then we teach you and exactly what we do. We buy these with private lenders. So you're not using your own money to buy these things. And then we're either going to refinance it and still create a positive cash flow, or we're going to sell it for a profit. The most money we've ever made has been holding assets, and we're still going to be holding, but we're going to be buying. It's time to, we could just make hay while the sun is shining. If you know what to go after, which we're teaching you what to go after, there's plenty of money to be made for years to come.
Mm-hmm.
It's a bull market, RJ.
It's time to go. We'll show you how to do it. If you guys got any questions about that, hit us up on IG. Our handles are on here somewhere in Restream in YouTube. Just comment. We did a training on a recent deal that we bought in a really nice part of town. Check out that training. I think it's in it's on YouTube. But if you have any questions about what we're talking about, hop into convo. We're here for about another couple more minutes. And that's going to be a wrap today. But if you're not getting into affordable housing, you should be. Most buyers, most sellers, most financing, most renters. That's where you're going to make the most money, in my opinion.
Mm-hmm.
And that's where you can create wealth.
In a nutshell, we'll just summarize, and then if anyone has any questions, then we're going to duck out. We got our end of the week meeting here, RJ and I, with our amazing team. But yesterday, the Fed implied they might lower rates. Today, the jobs numbers come out and it's dog shit. It looks terrible. We're headed into a recession. So now it's not might anymore. They're definitely going to need to lower the rates to save the job market. What's that going to mean for real estate values? Up. As they've been raising the rates the last 2 years, typically the reason they raise rates is to bring prices down. Because control inflation by raising interest rates. That's the purpose of raising rates, is to bring prices down. And they did bring prices down on a lot of things, but not home prices, not home values. So the play didn't work. What do you think lowering interest rates is going to do? It's going to make things go up even faster. It's crazy. So we need to be in the game controlling as much of this inventory as we possibly can. That's what we're here to teach you. We need to be working here, everybody. It's time to get to work. Set up your marketing campaigns, right? Get on the phone. Start controlling these properties. Learn how to raise money. This is what we'll teach you how to do, guys. It is your opportunity to get rich. Truly. This is not some get rich quick. You're not selling energy drinks. This is not some multi-level marketing pyramid scheme. This is the economy. This is what's going on in your life. You have this opportunity. You have the opportunity to learn from people who are doing it right now. Deals on the board, closing deals every single week. The best teacher is somebody who is in the game doing it right now, not somebody who used to do it, who's just regurgitating old information. They read a couple news headlines and now they're trying to sell you a program. We don't have a program. We have a community. We are doing a lot of deals. So I would love nothing more than to help you all. Let's get in the game. If you're interested in hopping on a call with myself or RJ or our team, the website to schedule a call is creamlaunch.com. That's cream, LAUNCH.com. RJ will stick that in the comments, and we're here for you guys. Let us know what you need to do. You don't need a lot of money to get started. We're going to show you exactly what we do, exactly the paperwork, exactly where to get the leads, exactly how to talk to the leads. Let's go. There's no excuse. Let's make it happen. RJ, any final comments?
That's it. We'll see you guys on the next episode. Remember, this is what do we say? It's you're the captain. The bad news is time flies, but the good news is you're the captain.
We're going to get this down one of these shows. Thank you.